Global economic crisis. Will your money survive or not? Robert Kiyosaki's warning. Soft landing, hard landing, or crash landing? I say crash landing. What are the dire terms with which revered life coach and business mogul Robert Kiyosaki described what he sees the global economy heading towards? This message serves as a firm warning to all concerned about the impending global economic collapse. With the incompetence and corruption in our major financial and political institutions being as flagrant as it is, it's not hard to see just how huge of a disaster we are about to witness. You're probably wondering how you factor into all of this. How will this downturn affect you, your finances? Or even better, how do you avoid being caught up in this mess to begin with? Keep watching to find out. The first half of this year saw three major U.S. banks go under: Silicon Valley Bank, Signature Bank, and First Republic Bank. One fun fact is that the first two were the largest bank collapses in U.S. history by a mile. Regardless of what mainstream news has told you to stop you from panicking and try to get your money out, a major global financial crisis is obviously around the corner. It's not like their efforts have been successful. Anyway, with more and more Americans starting to wake up to the reality of the banking system. It's telling that the banks started to fold one after the other just a few months after Robert Kiyosaki started warning of a financial crash back in January. He's not alone in his grim predictions for the market, by the way. Economist Peter Schiff expressed concerns about potential financial crisis and depressions in May. Many traders are anticipating the worst bear markets of their lifetime. For Kiyosaki, the signs were and are still numerous. The central banks of the world have been printing money at unprecedented rates. The Federal Reserve and several other central banks of the world have been hiking interest rates in their misguided attempts to combat inflation, with countries like Argentina raising rates to 113%. What are the fruit of these policies, you may ask? So far, it's been a sharp decline in middle-class spending power, a steep increase in inflation, ironic as it sounds, and more wealth and control in the hands of the wealthy. Another major indicator of a depression for Kiyosaki, the likes the world has never experienced before, is the BRICS developing an economic alliance to challenge the legitimacy of the dollar. The existence of BRICS and the rumors that the alliance was developing its own gold-backed currency is one of the biggest concerns why Kiyosaki had no choice but to sound the alarm. Now that we've established that an unprecedented financial disaster is looming, you're probably wondering how this affects your finances. Before we explore that, it's important to stress that this should not be considered investment advice and that you invest capital at your own risk. With that out of the way, let's continue. Firstly, according to the predictions of Robert Kiyosaki and fellow experts, this global economic crash is likely to be the end of fiat currency. Keeping your money would be a sure way to lose it, so we don't want to do that. Obviously, the only way you won't be stranded when disaster strikes the economy is investment alternatives for your money. We're going to break down what we think are your best options from most reliable to least reliable. Where should your money go? At most reliable, let's start with gold. Like most other non-printable commodities, gold has a history of retaining its value. It's the currency we fall back to when currency doesn't work. This is probably why Kiyosaki calls it real money or God's money, while he calls fiat fake money. Gold has been very valuable for several millennia and will probably still remain so a few centuries from now, even more so in the face of economic collapse. Kiyosaki and other investment experts have projected the value of gold to rise to an insane $12,000 if things go under. Gold is the perfect hedge against inflation, as its price will reliably rise with the cost of living, often surpassing it. When the value of the dollar fell against other currencies from 1998 to 2008, guess which commodity tripled in price? Well, it was gold, of course. During the economic recession in '08, which commodity doubled in price? Still gold. Gold prices went up over the past year, with each ounce currently being worth roughly 6.8% more this year than last June, while inflation has been between 6% and 4% over that period. An added advantage of investing in gold is that it is in very low supply and very high demand. Global gold reduction dropped from a peak of 3,300 metric tons in 2019 to 3,000 metric tons in 2021 and has only been dropping since. Keep in mind that it can take up to a decade to get a new gold mine in production, and we have guaranteed high prices. Gold is so tested and trusted that our next investment option is called the digital gold. Our next best alternative investment option will have to be Bitcoin. Bitcoin is completely decentralized, so it's one of the best ways to avoid the prying eyes, the omnipresent grasp of the central banking system. It should be your go-to currency if you value financial autonomy and anonymity in this consistently surveyed world we're living in. Bitcoin is also a more reliable bet against fraud and hacking due to the encryption of the blockchain. Bitcoin can be traded anywhere and its value only rises over time, especially during periods of economic instability like the one we're currently heading towards. Bitcoin is also a fixed asset. Should be clear why you'll need that instead of fiat money to weather the incoming crisis. Next, we'll consider Kiyosaki's unorthodox investment suggestion in Wagyu beef. He first got the idea of investing in the highly expensive breed of cattle when a friend of his moved to Wyoming and bought a large ranch in 2018. Originally from Japan, one of the most sought-after and luxurious brands of meat in the entire world, just one Wagyu bull could sell for as much as $30,000. Wagyu beef is unique in its high levels of body fat and its predisposition into intramuscular marbling, in which the fat is distributed in thin threads flowing through the meat. It's an exceptionally tender and flavorful brand of beef, owing to this and the stress-free environment these bulls need to be raised in. There are different grades of quality standards of Wagyu beef, though, usually varied due to the rearing method, species, and diet. The beef might be pricey, but it would definitely be worth it for any person or an establishment trying to get the highest possible gastronomical experience for themselves, their guests, or their clients. Now, for the investment option you should be running away at this point in time, real estate. You might be shocked because it's just conventional wisdom to branch into real estate as a way to diversify your portfolio. But take our word for it, you do not want to be investing in real estate during an economic collapse. This is why. Real estate is normally a risky business, even during boom periods, but it becomes particularly volatile during economic turndowns. In the 2008 global recession, the burst of the housing market bubble led to several companies that were considered too big to fail filing for bankruptcy. The conditions for a real estate crash are presenting itself once again. House prices skyrocketed during the COVID pandemic and have only been growing rapidly since then. Some economists might want to contest this, but the housing market is currently in a bubble, the biggest we've seen since 2008, and a crash is on the horizon. Even in a decent market, there are plenty of reasons why you shouldn't invest in real estate. Negative cash flow is the norm, and not the exception with real estate markets, especially if you aren't investing in high-value property or buying up a ton of houses. After paying the expenses, taxes, mortgages, and insurance costs, you most likely won't have anything left unless you're currently loaded. There is the risk of high vacancy rates unless the investor only buys where there is a very high demand, guaranteeing negative cash flow, at least initially, for reasons discussed earlier. You'd have to put in the time, the work, and let's be honest here, the money to market and promote your property. Bad tenants will cost you money on the flip side, probably even more than if you had no tenant at all. The financial drain of having a tenant who doesn't pay on time or at all, who won't report maintenance issues, or worst of all, someone who damages property has cost more than a few people their real estate investments. Most importantly, for situations like this, there's the lack of liquidity of real estate. Buying property at the height of a bubble like the one we're currently in would be like putting money in a fire pit when we're talking about the sheer magnitude of the loss that would be made. We're going to end how we started, with Robert Kiyosaki's warning, but this time in its entirety. I believe economy is the biggest bubble in world history. God have mercy on us all. Soft landing, hard landing, or crash landing? I say crash landing. I hope I'm wrong, yet that is what I believe. Corruption is high and leaders corrupt. Buy gold, silver, Bitcoin, still the best insurance against corruption and incompetence. And with that, we've to the end of the video. Be sure to like and subscribe for more helpful insights.